Hey guys, Akil Stokes here, Forex trader and trading coach over at tier1trading.com. Welcome to another one of my weekend trading edge videos where I take you on a walk around the market, showing you the best opportunities that are on my radar for the week ahead. In today's video, we're going to talk about dealing with confusion and how having a process can keep you out of the whipsaw. So we're going to start this week with a follow-up on the euro dollar. And the euro dollar was one of the pairs we talked about last week, and really one of the pairs that made me look like a complete fool. Now don't worry, it wouldn't be the first time. This is what the market does all the time, but always a little strange when you put it on YouTube, then the market kind of does not the exact opposite, but kind of a whipsaw effect. And for you guys that are new, the whipsaw effect is basically when the market kind of treats you like a tennis ball and it kind of just bounces back from one side to the other side, giving false signals. And for a professional trader, it's not a big deal because we have a process for how to deal with that, and I'll talk about that in a little bit. But for a newer trader, thinking back to my younger days, this is where a lot of revenge trading would come in to play, where I would have a prediction that the market was going to go one way, then I'd take a trade, then it would go the other way, then I'd get mad and I'd reverse and take the trade in the opposite direction, trying to make my money back, and then the market would go in the original direction, and basically I was always kind of one step late. So I want to follow up on Eurodollar, talk a little bit about what happened, show you the next opportunity that's on the table as well. And this also follows up on a really good point that we've been discussing over the past few weeks on the platform with a trader who's been kind of having struggles with structured trading. So if we dive in, kind of just a recap, and I'm hoping that you guys did see last week's video, we have a prediction that Eurodollar is likely to continue lower. We had broken this VS1 level right up here, and we thought that we could push down to at least 115s or maybe even a little bit lower. And if you go down to the 240 chart here, the 4-hour chart, here was the latest move that we had during last week's video. And I said a few things. I said, hey, one of two things can happen. We can either have a very strong trending move, and we get a little bit of a retracement here, and then we continue straight down to that 115 level, or we may put in a deeper pullback. And if we do something like violate these highs right up here, we're likely to pull back a little bit deeper into previous structure before heading back down. So either way, I was predicting a continued move to the downside. The difference is, how aggressive or how immediate that move was going to come. And you can see what price action did was it actually ended up breaking to the upside, giving us that little head and shoulders deal. If I can draw this in kind of real quickly, this is going to be your left shoulder, your head, your right shoulder right here. This is the break in violation of the neckline that confirms the head and shoulders, which is a classic reversal pattern. Then instead of kind of bouncing here and giving us that complex pullback right up to this level, we just came straight down. So it's, again, flashbacks to a younger me where I would have been involved one way and then involved the other way and all over the place with no rhyme or reason. So what I wanted to talk about a little bit today is how do we deal with situations like this? Because a lot of you are probably shaking your head when I mentioned the whipsaw. The market goes one way and gives you one signal and goes the other way and gives you another signal. And you're like, yeah, Akil, I've been there. I've been in situations where I always feel like I'm a step behind the markets. And this is something we've been working with one of our traders with over the last few weeks. We had a trader, one of our premium members that has been in a live room. He's a structured trader. He's got some pretty decent rules for structure or for trading as far as his trading plan goes. But he says, Akil, it's not working. Something is not clicking. So we said, hey, over the next 2 weeks in the live room and in our Q&A sessions, we're going to really dig into the topic and we're going to help you find the fix. And in this past week, we looked at his trading plan. We reviewed his trading plan. We reviewed some setups. We looked at trading opportunities. I gave my analysis. And at the end of the day, as I mentioned before, there weren't really any main problems with the trader's rules for trading. There were some things we had to kind of fine tune in there, but no major issues as far as the rules, no major issues as far as identification. The main issue that we found was that there was a lack of process, right? This was a structured trader who was simply looking for levels of structure. So identifying levels of support and resistance. We pop back up to the daily. You can see these VS1 levels. These are an indicator that we have here on a tier 1 platform, like a visual support and resistance indicator. And basically the trader was just looking for different levels to trade off of. Like, hey, every time we go to resistance, this. Every time we go to support, that. And one thing that we thought was missing was the overall process. And if you've been with me for long enough, you've probably heard this every single day in every single video. I follow a 4-step process, IPDE, identify, predict, decide, execute. It was probably one of the most beneficial things ever taught to me in my trading career because it gives me clarity before I make any type of actual trading decision. And the process, what the process does is it essentially gives you a bias. So instead of just looking for moves at every level of support or every level of resistance, we want to create a bias in the market of what we think price is likely to do next. And then if we want to only look for grade A trades, we want to isolate the levels of support and resistance, just in this particular case relating to the trader, that meet our overall prediction. So when you look at the situation like this, you can see a violation structure tells you one thing. You should only look for a move in one direction. Once we violate structure back to the downside, it tells you another thing. We should only look for another move in the direction. So kind of shortcutting this and not making this too large of a rant, right? Once we put in a fresh break of this low again, now we're back in that bearish mode where we should only be looking for bearish continuation trades if you're going to be a continuation trader. So that means that you're not necessarily looking for buying opportunities down here, even though we're at structure. Why? Because your overall analysis doesn't necessarily say that we should be looking for a buy, or even like the little double bottom right here, right? I don't think this is a good double bottom to buy because overall, when we do our analysis, we just had a lower low, lower close. A lower low, lower close allows us to make the prediction that we're likely to continue lower. If our prediction tells us that we're likely to continue lower, why am I looking to buy, right? So again, it's different than, this is what I say all the time, where it's not the what, but the where. It's different. There's a difference between just looking for the thing, double bottom, triangle, head and shoulders, whatever it may be, versus understanding the where. Where is this thing happening at? Is this at an actual location in the market where I predict price to go in this direction? If no, then leave it alone or look for a more conservative approach. If yes, then you can go ahead and start looking at how to take it. So speaking of how to take this, if we go down one more time frame, let's go to an hourly. Again, I told you we're looking for a bearish move here. If we go down to an hourly chart, we do have a potential advanced pattern setting up. Let me bring out my little tool here, and we're going to take a swing high to swing low. That's going to be our X to A, our impulse leg. Our first retracement is going to be our A to B. You can see we come to the 50% retracement or past the 50% retracement, which means I'm on bat pattern alert. We then have our next smaller retracement. We refuse to extend, giving us our B to C leg. And if price action were to rally up to our 886, we're going to have a decompletion for a potential bearish bat pattern. So the zone of that bearish bat pattern is going to go from the decompletion all the way to the X. So a nice little kill zone right there. This is a bearish pattern, so you're just looking for a move down here. But remember, the overall analysis is bearish. So if you want to get fancy with this setup, this would be one where you may want to shoot for extended targets as well. We're looking at that 115 level. That's a good level to shoot for based on previous structure. If we just take a Fibonacci extension and draw it from our X leg to our A leg, let's see what that gives us as well. Swing high to swing low and back up. Look at that. 127 Fibonacci extension right around that 115 level as well. So a good extended secondary target, obviously if it meets your rules. All right, next we're gonna look at the Euro Canada. Apologies for the raspy voice in the first session. It's early Saturday morning. I'm trying to do this video before I get my day going, and didn't have my tea or my coffee or anything like that, so the voice is a little bit raspy for you. But we're going to go to Euro Canada next. We've seen a lot of strength with the Canadian dollar over the past few days. There's been some good numbers come out. There's been some oil news as well. So you look across the board on a lot of these Canadian pairs, and you're going to see some pretty key directional moves. So whenever we see those key directional moves, the question we want to ask ourselves is, okay, well, we're moving in a direction. Where are we likely to go next? Because that's going to set up an opportunity for us no matter what side of the market you are on. If you are a continuation trader, you're asking yourself, well, is there more meat on the bone? Meaning, is there still room for me to hop aboard this directional move and make some profit? If you are already in a trade, obviously, and hopefully you would have done this already before entering the trade. But if you're already in a trade, you're asking yourself, where's the market likely to go? Because that's going to be an area where you're going to be looking to take profits off. And of course, if you're a counter trend trader, you're looking for the end of the move because you're asking yourself, where is the selling pressure in this particular case, or the buying pressure on another pair? Where is it going to slow up at? Where can I catch some relief? And as a counter trend trader, all you're looking for is some relief. So going back to the process, and don't mind these little labels on here. This was a chart we're using for inside bars and narrow range bars, and we're doing some work on that. But what I want you to pay attention to is what we just did. And what we just did here was violate a VS1 level. Again, those green and purple boxes. One is a major level, one is a minor level. That doesn't really mean too much for this video. All it means is that, excuse me, this is a key level of structure that we are paying attention to. Now, if we're going about making the prediction of where price action is likely to go next, and you find yourself struggling, an easy way to do it is just go from one level of structure to another level of structure. So we violated one VS1 level here. Where are we likely to go to? Well, probably our next VS1 level, which is going to lay right down here at this previous swing. So you kind of have not a way to cheat, but a very easy way to give you an idea of where price action is likely to head to next. So again, two ways we can look at this, and we'll pop down to a lower time frame just to give a little bit more clarity perhaps. But two ways we can look at this. If I just zoom out a little bit. One, if you are a continuation trader at the open of a new week, you can see if there's any type of pullback and a chance to continue. Oops, wrong tool there. A chance to continue back down to about 143.50s. Again, doesn't seem like a lot of room right now, but we're actually trading at 144.16, so that's already about 65 pips. If you do get a pullback, let's say to 145 even, which was the last little structure shelf in here, you're looking at a pretty significant move, or a 150 pip move, or 150 pips of potential profit down to that level. So it doesn't seem like a lot, but it's a lot more than what it kind of looks like if you actually look at the values. So as a continuation trader, you're looking for that pullback and a move down. If you are a counter trend trader, you're waiting for price action to hit that level. And once we get to that level, that's going to start to zone your kill zone of where you're looking for that counter trend move to capture a little bit of relief in the market. So keep Euro Canada on the radar. I believe Pound Canada is going to be the same thing, if I remember correctly. Just hop out to the daily. There's a lot of Canadian pairs. These were the two I wanted to focus on. Pound Canada is going to be very similar. Now you can see we're already at kind of the bigger VS1 zone down here, but I do think we can travel a little bit lower on Pound Canada. So we take a look at a 4-hour chart again, similar situation. We just broke a previous level of structure right here. If we zoom out and look to the left, right, you can see more structure was broken as well. I do think we can travel down to these lows about let's say 169, right? 169 is just going to be right at kind of this area right here, the consolidation at the bottom of that, 169-ish. Now you do have a little bit of minor structure in here, right? Look at this little area, this little bad guy right here. But really that's going to be minor in comparison to the bigger level. So I do think that will continue that move down. So same situation here, right? We're currently trading at 169.65. So already about 65 pips of profit for a continuation down there. If you get a little bit of relief, whether it's a move back up to here and down, that's going to open up a lot more profit, potential profit as well on this pair. And of course, if you're a counter trend trader, well, if you're like me, you're hoping for a straight nosedive to that level and then a potential for either a double bottom or maybe even like another V reversal like we saw here around that 169, 168.50 level here on the Pound Canada. All right, so next we're going to do a little bit of change of pace. We're going to head over to the dollar index, and I'll show you guys an opportunity that's on my radar. By the way, congrats. I think I said this before. It's been a while ago, but congrats on you guys that took the cipher on here. This was a trend continuation cipher. You can see it hit. The trend continued. Well done, right? So question is, what's next? Let's head over to the daily real quick and ask ourselves, where is price action likely to go? Well, price action is currently holding at a previous level of resistance. You can see this bad guy right over here. If we were to violate that level, the next level that we're likely to go to is going to be this red line around 95.70s. And what we're setting up here is a potential breakout pattern. Now, this isn't one that I'm personally too interested in because I have all types of biases when it comes to structure, so I can't create a bullish bias until we violate structure. You know, the same lessons we've been talking about all video. But this video isn't just for me, and how I trade is to give ideas for you. And I know, especially if you're a breakout trader, a lot of you guys are a little bit more aggressive, so I do want to put this on your radar. If we zoom into the 4-hour, you can see our market is starting to coil, starting to consolidate, right? Imagine it like a spring that's being squeezed, right? We have this long extension up, and then we have a short retracement, and then we have a failed extension creating a lower low, or lower high, excuse me, right? Highest high, lowest high, and currently we're retracing right here before the week ended, right? If we continue this coiling type of pattern, right, this is going to give us a wedge pattern, right? Something where we're continuing to get higher lows, we're continuing to get lower highs. This is going to be a wedge pattern. You add to the fact that we had an upward move before it, this is going to be called a pennant pattern. And this is a breakout pattern where the normal prediction would be a breakout to the upside. Now, again, for me personally, I need to see the violation of structure or the completion of the pattern before I can predict such a breakout. But if you're someone that has a bullish bias, this is kind of your next kind of pregnant pause, right? Again, the market came off of that cipher. We put in a very nice directional move. Wouldn't surprise us at all if we took a little bit of a break before the market made up its mind on what it wants to do next. And then boom, continued higher to that next level, again, around 95.70s. Now, something else that can happen here as well is we could get an advanced pattern formation, or a few. Actually, it looks like, I don't know if this is going to be long enough. Let's just take this real quick. And nope, that one's going to be a little bit short. But if we do something like this, right? If we just, let me just take out a Fibonacci here. Yep, 50%. If we do something like this, swing low to swing high, X to A to B, coming to our 50% retracement, which means you're on alert for what type of pattern, guys? Type it in the chat. Oh, type it in the chat. This isn't the live room. Type it in your mind, write it on a piece of paper, guess, pause the tape, whatever. This is going to be our C leg, and we're looking for a D completion right here. So if this doesn't end up being a wedge pattern, and we end up getting another kind of retracement down, you're going to have an advanced pattern formation right here at a pretty decent level of structure as well in the dollar index. Next up is going to be oil. We talked about oil a little bit earlier when we talked about Canada. Oil's been one of the best investments I've made over the last couple of years. It's actually, if you guys that are kind of newer or out of the loop, it's actually the reason that I stopped day trading. Now, I was planning on stopping day trading anyway. It's a cool podcast explaining that whole story why, but the opportunities that 2020 created, don't get me wrong, COVID and 2020 were horrible. From a selfish investor's perspective, it was the opportunity of a lifetime. It created some really great opportunities. And if you look at the chart in front of you, you can see that oil was one of those great opportunities as we got into kind of the COVID era starting here in 2020. So I'm happy with it. But from a technical perspective, right, let's take a look at what's happening next. So we have just violated a previous structure high, higher close. We've got a beautiful candle here, right? We had a breakout. We had an engulfing candle, which is kind of a negative sign. And then we got this beautiful candle right here where price action essentially retraced, retested this previous level, right? Again, wick over here, right? Wick over here. These are important levels to pay attention to. Not only did we close with a bullish candle, but we ended the week with a higher high, higher close. So my prediction is that price is likely to continue higher. I would love to see one more higher high, higher close above this to really get that confirmation. But if we are going to continue higher, the next place that we're likely to go to is going to be our inside level of structure in our little consolidative area right here around 90.80s. Maybe we can call it just 91s to be just to make it easy on the ears. But 90.80s, 91. So you can see we're currently trading at what? Right under 80, if I remember correctly. Yeah, right at 80. So a good amount of upside room here on oil. And this is kind of the easy conservative target projection. The higher one is going to be up here around 107. So cool opportunities here on oil. Now, before you leave, do me a favor. If you like this video, hit the like button on your way out. Also, if you have any questions or comments about anything in the video or anything trading related in general, leave it in the comment section below. I do read through each and every one of them. I do respond, so don't feel like it's a waste of time. Also, if you haven't done so already, make sure you head over to our website, www.tier1trading.com. We got some free workshops over there that are awesome. We also have a $1 trial membership where you get access to the software that I showed you in this video, the pattern recognition stuff, the structure stuff. You get access to some training courses, and you get access to the live resources that we do, or the live sessions, I should say, that we do on a weekly basis. So check it out. Take that 14-day trial, mingle with the community, learn what it takes to be a consistently profitable trader, and I'll see you guys next week. Oh, if you're not subscribed, hit that subscribe button. Trying to hit 50,000 subscribers by January 22, and you guys are the biggest help in me doing that. So subscribe if you're not already. Spread the word to your trading community. And until next time, plan your trade, trade your plan. Take care.